Hi everyone, and welcome to the third edition of the FinLit Network. My name is Sofie from Krusenstierna, and I will be hosting this network event today together with Philine Prinz, who will lead us through today's panel discussions. The FinLit Network is an initiative started by the piggy bank and financial education app Gimi. And by hosting this recurring networks event, the aim is to raise and discuss the existing and the potential effects of the transformation from society with cash to a cashless society. What opportunities do we see? What consequences can we learn from? And what solutions do we need further on? For these 2 hours, you can expect to see a diversity of perspectives. The FinLit Network should be an open arena where we can see the financial landscape from every potential angle that is possible. By doing that, our goal is to gain an understanding of how we can create a sustainable and democratic financial future for the next generation. Today, I'm so thankful for hosting my third FinLit Network. And I'm happy to announce that this event actually comes with 3 news. This is the first event that is hosted in English, and the first event that has an international perspective, and the first event that we are 2 hosts who are doing this together. 3 signs providing that the FinLit Network is actually growing, just as the importance of the topics around financial literacy and the future in a cashless society. First out today, we have Jansson, Vice Riksbankschef at Riksbanken. And he will explain their role in the financial transformation, and he will explain what he sees coming ahead. The stage is yours. Welcome.
Thank you very much for inviting me to this forum. It's a great pleasure to be here and be able to talk to you. I should also say that I have a colleague of mine with me, Andreas from the Riksbank. He's one of our experts in this field. So in the case you have very complicated questions, I will gladly invite him into the discussion as well. Let me also thank you, the initiators of this forum, for creating it. I think it's a great forum, and the ongoing digitalization of money and payments, of course, brings many possibilities, that's obvious, but it also brings many challenges. So I think having this kind of conversations is key to making progress in this area. So I'm forced to be very selective and focused. I have only 15 minutes, so you have to understand that, but we can broaden the discussion later on. And what I have to say will be primarily on the role of the Riksbank, and in particular what we're doing when it comes to our e-krona, the digital currency that we are working on. So just to introduce this, you know, the Riksbank, of course, plays a key role for money and payments in Sweden. That's, I think, pretty obvious. So at the moment, we provide money that you can use for payments as physical cash. And we also provide the key infrastructure for digital payments. This is a settlement system we call Rix, which probably most of you are familiar with. And we ensure that the Swedish krona keeps a stable value through our monetary policy. As you may know, we have an inflation target, but a predictable and transparent way of running monetary policy also contributes to the stability of the krona in general terms. It is, of course, our ambition that what we provide in this field is up to date and that it lays the best possible ground for safe and efficient payments in Sweden. But being up to date, as you can imagine nowadays, with these quick developments and trends that we see, is not that easy. But I think we're stepping up in the central bank community, not only the Riksbank, but other central banks as well. And this is needed, and I think we're making good progress at the moment. So I thought I would give you an overview of what we're currently doing at the Riksbank, and also some personal reflections on a few aspects of this. So switching then to my next slide. So I think when thinking about what is happening with money and payments in Sweden, an historical perspective is valuable. And I think you may look at this in terms of 3 stages. So the first stage, which is actually not very long time ago, most payments were made with cash. And that was, of course, pretty natural in a time when bookkeeping and exchange of information took a lot of effort, time, and was paper-based. And also at that time, with cash, there's an immediate settlement as the recipient gets the money directly. So loosely expressing this, you could say that the entire deal is undertaken as soon as you have paid, and then it's sort of it's done. Back in the 50s, as you can see in this slide, the total value of cash that circulated in the Swedish economy was about 10% of GDP. That's a number quite similar to what we have today in the euro area. In the second stage of this, new technology made it easier and faster to pay with what we usually call commercial bank money. So basically, the deposit accounts that most of us, basically more or less all of us, have at the commercial banks. And at the beginning, this involved checks and paper-based giro transfers. For some of the younger people in the audience today, that might be sort of exotic things, but it's not so long ago that those things existed, and some of them, as a matter of fact, are still used today. And later on then, of course, we moved to electronic payments, such as card payments, which are still, of course, very much used today. In the third phase, more recently, the internet and digital technology have meant that bookkeeping and exchange information could occur instantly and in principle required no work at all. So it is now possible to build systems whereby payments from a bank account to another bank account happens in a second or so and is initiated from a mobile phone, a smartwatch, or some other digital device that most of us have with us all the time. And here, of course, Swish, the payment app that most Swedes have in their phones, is the prime example of this development stage. And the result of all of this is evident, I think, if you again look at the graph. So in the early 50s to basically today, cash as a percentage of GDP has fallen gradually and is now around 1% of GDP. So with this, we are probably the country in the world with the lowest use of cash. Norway is another country very close to Sweden that also has a very little amount of cash in circulation. But those two countries, I believe, are outstanding in this development. And it's pretty obvious from all of this that digital payments are here to stay. This is nothing that will disappear very quick. This is a development that is going on, and we better take it seriously. So, but while cash has its roots in bygone times, as you may want to put it, it still fulfills important functions. So one of the key functions here is that it contributes to a uniform monetary system. And what do I mean by that? It is that each krona deposited in a Swedish bank can be exchanged 1-to-1 for a krona in the form of cash. And this also means then that a krona in one bank is worth just as much as a krona in another bank. This may seem a bit complicated, but it actually ensures that basically the exchange rate between all these kinds of monies is unity, which is a very important point in the financial system. Countries with different exchange rates usually don't do very well. So ensuring that you have a unity exchange rate between these different monies is very important. Also, cash, I think, is emblematic for the Swedish krona. It offers a safe alternative to commercial bank money. And many, I think, of us, maybe a bit older people, but also I think many other people consider this to be the very definition of Swedish money and the currency. It's very difficult to imagine a world where simply there aren't any coins and bills anymore there. Also, it can be used when there's no electricity or functioning digital infrastructure. And this may be important for certain parts of our country in particular, but also, of course, if we happen to run into a crisis or even a war, then, you know, this might be a very important aspect. And finally, cash makes it possible for those who for various reasons have difficulty in using digital solutions to make their payments. I think most of us here think of elderly people, but it's also true that there are other groups who have problems accessing or using advanced digital solutions. And it's important also to think about these people as we consider these developments. So if cash continues to decline as rapidly as it has done recently, Sweden will in practice be a cashless society within a decade or two. So it's not really something, 100 years away. It is just around the corner. And we would then lose the functions I was just talking about. And it would also mean that we were breaking a long tradition whereby the state or the Riksbank has provided a means of payment for the general public to use. And that it is a means of payment for the general public is key here. I'm coming back to that just in a second. To deal with the decline in cash, the Riksbank is investigating whether it is possible and desirable to use a digital complement to cash. This is what we call the e-krona. And just like cash, the e-krona would be issued by the Riksbank and available to the general public. So this is what people call a retail central bank currency, digital currency, as opposed to a wholesale that is only for financial institutions. That's an important point to make. So in that the e-krona would be digital, it would be better adapted to our digital society than physical cash, and it could be used in situations where it's not possible anymore to use cash. And it could potentially ensure that we retain several of the functions of cash in a future when physical cash is no longer used. So for example, the function of ensuring that we have a uniform monetary system that I was just talking about could be retained in that it would work with the existing payment system and be exchangeable one-to-one for cash and commercial bank money. Also, the e-krona would, in the same way as cash, be a state alternative to commercial bank money, just as cash. Depending on how it is designed, the e-krona could be used when there are disruptions to the electricity of supply and also disruptions to the digital infrastructure or bank payment systems. And we could also produce variations that make it easier to pay for those who have difficulty using the current digital solutions. And this, of course, taking care of externalities of that kind is easier for an institution that has no direct commercial interest as, for example, the Riksbank. And finally, it could also be a platform for further innovations and new payment services. So various functions that cash could be retained with an e-krona. But I think there's also more fundamental aspects that one needs to think about when it comes to the disappearance of cash. So one here is that an e-krona can be a safeguard against future threats to the Swedish krona. What I mean by this is that if you think about fintech companies with a large platform of users, I guess Facebook being the prime example, they may soon start offering payment services based on their own or a foreign currency. And if these services become common in Sweden, currency substitution may become a real risk. This risk doesn't sound perhaps to you as very eminent at the moment, but you have to imagine that after all, the decline of cash that we see in Sweden has nothing to do with, say, the Swedish currency being a less good product than the euro. It has to do with other aspects such as adaptation to new technology in society. And there Sweden is a very quick mover. So this could actually happen also in a country like Sweden. And if we lose the Swedish krona, we also lose control of monetary policy, and the Riksbank cannot anymore be the lender of last resort, as we call it. So this is the possibility of the Riksbank stepping in and providing currency when financial institutions run into problem. And this, of course, requires control of the currency in the country. And if you don't control that, then you have a problem fulfilling that function. And this would, of course, be a very problematic situation for us, and it would run counter to the decision that we made in the referendum in 2003, when a majority voted to keep the Swedish krona and not introduce the euro in Sweden. And I believe that a well-designed e-krona would contribute to ensuring that the Swedish krona will remain the unit of account in Sweden, and also the currency that we use for making payments in the country. Let me here also just quickly add a few words on the relation between the e-krona and stable coins, which I'm sure you've heard about. So stable coins are cryptocurrencies that are backed by some other asset, for example, government securities or some other safer asset. One could, for instance, think of a Swedish stablecoin where the backing is in krona-denominated assets. And proponents of this stablecoins argue that they can be a platform for innovation and new services that can enhance the competition in the payment system. And while this may all be true, that stablecoins could fulfill that function, we also, I think, need to consider potential financial stability risk with stablecoins. So one here is that in a crisis situation, users want to get rid of their stablecoins, and the issuer will have to sell the underlying assets in order to meet that situation. And that can lead to a classic fire sale with associated price falls and further runs from the stablecoin. And I believe that an e-krona appropriately designed could offer many of the services and possibilities that the stablecoins are supposed to offer, but with a very important difference, namely that there's less risk since the backing is more solid and robust. And what I mean by this is basically that the e-krona is backed by the entire Swedish economy, including its stable institutions and stable economy and growth potential, which is something very different to backing in terms of financial assets. Sometimes we hear that an e-krona would be fundamentally changing the payment market. And I don't really think that this needs to be the case. As a matter of fact, I would rather think that it's just the other way around. Not having any safe state money would be the big change. And as I see it, the e-krona would be a continuation of the system we are used to, where the Riksbank offers safe state money as a complement to private money. And up to now, this has been done with a technology that was effective when communication and bookkeeping took time. And with an e-krona, it will be done with more modern technology adapted to the present day. And thus an e-krona could be a way for us to ensure that the money that we offer is up to date and adapted to the digital realities of today. And it will ensure that the general public has continued access to state-issued money, just like we have had for almost 400 years. And let me just then finish off with making the point that this is not just something that is going on in Sweden, which I think is important. So many central banks around the world are working on digital central bank money like the e-krona. And the technological shift entailed by digitalization affects all countries, although at various speeds. And one example of an aspect that is affecting the speed here is just the amount of cash in circulation that I showed you in the beginning, where Norway and Sweden are countries that are more under pressure because of this development, but there are other aspects such as competition with other players that come into play as well. So digital central bank money, usually called CBDC, is therefore investigated by most central banks around the world, including the ECB, the Bank of Japan, and the Federal Reserve in the US. And the Riksbank is deeply involved in the international cooperation and development of core principles and features for digital central bank currencies. Together with other central banks, we are also investigating if and how digital central bank money can enhance cross-border payments. I think this last point is a very important one. It's pretty clear that we're lagging behind when it comes to cross-border payments. They are too slow, they are too expensive, and this is an area where we need to step up, and the Riksbank is working on that, but I don't have time at the moment to go into details there. But just to finish off then, the Riksbank has not yet made any decision of whether to issue or not an e-krona. And if it will come, it will take some time. This is nothing that you sort of do overnight. It's a lot of testing involved, and you need to be very careful when you develop this. And there's also a big governmental payment inquiry running, supposed to be completed by November 30, 2022, that will be dealing also with issues related to the role of the government in the future payment markets. And this will matter for how we proceed in this area, I'm sure. So thank you very much for listening to me. I stop there.
Thank you so much, Per. And with that new knowledge, I would like to hand over to someone who has been working in the banking sector for a long time and realized that the information and educational tools around savings and how to earn money was mostly serving people like himself, people who are already very interested in finance or worked with finance daily. A situation he wanted to change. I say a warm welcome to Daniel Roos, CEO at Njorda.
Hi, thanks for that intro, Sofie. So first off, I'm very happy to be invited. I think this is a super important topic to discuss. So let's get to it. So as Sofie said, my background as founder of Njorda is a bit more in how you manage your savings and investments. And of course, you save in cash. So let's start there. Everyone can see the slides, right? Awesome. So when we talk about cash, it has two main purposes. It's a medium of exchange. You can do payments with it, and it's a store of value. You can save in cash. Maybe not the best idea, but you can. On the payment space, like Per just covered, there's been a huge change. Like we're almost not using cash. There's no need for cash in Sweden, and there's a lot of innovative technology. Now, what's happening with the piggy bank, like your classic savings? Can that too go cashless, and what does it mean to save cashless? I'm going to start with 6 very quick trends and technologies to set the stage, and then kind of wrap them up in a picture of what we can expect going forwards and what's actually possible already today. First off, digitization. Like we're not in physical cash, so cash has moved from the physical world largely to the digital one. That brings it closer to other assets. So suddenly you have crypto funds, stocks, and they're all in kind of the same digital universe. This highlights a difference that with the cash, you're not really getting any returns unless Per decides to increase the rates dramatically. Otherwise, you can get your choice of returns and find something more suitable for your situation using other assets. So this is an enabler to like invest sleeping money which you have parked on a bank account, which you should be invested since maybe you're young and you have a long-term view. I'll put the e-krona in there too, since that was kind of an interesting perspective, a bit for the future. Okay, second trend, neobanks and super apps. Like in Asia, it's big with Alipay and WeChat, like one app that has everything in it. And we're seeing a lot of entrants in the fintech space where you have new banks that are mixing it up a bit. So you have cash and investing in the same app. No account opening, no delays, it's super smooth. So personal example, here's an app I used for traveling, books it has like 0 cost currency exchange. This is my cash account. And then one click away over here, I have crypto investing. When you use this app, it feels almost like just moving money between accounts, but you're actually putting them into some, very interesting assets instead. So takeaway here is cash investments are getting closer in terms of like click distance for your regular retail users. Then something that's super important is it's all getting cheaper, even free. So costs are going down. Like for 10 years, we've had funds which charge 0% management fee. Free stock investing is big in the US. Like you would not expect to pay anything to invest in stocks. It's some availability in Sweden for like smaller amounts. You can invest in the stock market. There's no fees charged. And the big thing that's happening now is fund rebates. Like when you invest in a fund, there's a fee charged. A large part of that is a kickback fee to the distributor of the fund, like your bank. And a lot of new actors are giving that to you. So you can invest and do it much cheaper. So this means you can invest short term. You don't have to keep the money invested as long for it to make sense. Another trend, which we're seeing again from the US, but what happens in the US generally comes over here, and this is probably new to a lot of people, is fractional shares. So normally, if you want to invest in a company, I'm super excited about Apple or Tesla, you need to buy at least a whole share. So for Apple, you have to spend at least $153 to buy one share as of like yesterday. With fractional shares, you're able to buy a part of a share. So you can say, I want to buy Apple for 95. That's what I have left over today. I want to do like a mini savings in Apple. And then you own a small part of Apple instead. This makes stock investing more cash-like. You can do it in like small fractions. Big in the US, there is some limited access in Sweden if you really look around. This lowers the threshold. It makes saving in stocks available to people that have very little assets. Okay, trend 5 is kind of an older one, but that's becoming important in this context is Roboadvisors. The concept that you'll have a service which asks you a number of questions to find out what your goals and risk tolerance are, and then it just invests for you. So basically I can say, I don't need to know how to invest, my app just does that for me. So this is kind of about removing the knowledge requirement, which is kind of a topic of FinLit here. Many actors came in. These are the early ones. Now there's hundreds. It's like everybody has a Roboadvisor. So it's super mature, but it's relevant when you talk about investing like your cash savings, because somehow it has to be managed. Last trend is kind of happening with Klarna and the whole buy now, pay later, also with credit cards. It's actually a way to unlock cash. So a lot of these services, you can pay for something now, but you actually have to pay 30 days later. This is in essence a free loan. So instead of taking your cash and paying for something, you're getting a free loan with very good rates. You can invest your cash while you're waiting to pay your credit card bill, or in some cases, a buy now, pay later bill. And this actually unlocks, it's like cash flow management that companies does, but for personal use. So you can unlock more cash and be more invested and actually stay in like zero cash, instead use credit. So summarizing these trends, the kind of big picture is it's now easy to convert cash to other assets. It's one click away. It's very possible to invest in the short term. So you don't have to think in years. You can actually do investing for like 30 days. If you have some spare money left over, should be invested. Small daily savings can also be invested. There's a perception, at least, that anyone can invest because there's a robo-advisor for that. I mean, that's kind of thin line, but there are some thoughts there. And you can actually unlock more cash to invest. So short version is there's really no reason to keep cash savings, providing you're willing to take some risk in return for growth, especially if you're like a younger person, that makes sense. Formulating it in a totally different way, there's the real räkmacka for the taking. Like if you're willing to dig in, find all the services, figure out how the market works. And this sounds like a cheesy sales pitch, but then you can have more than 100% of your money invested. You'll get cash back every time you spend money. You'll never pay exchange rates when you're traveling. You buy your funds 50% cheaper than pretty much everybody else, etc. So there's a real difference between how the average person manages their cash and what's possible if you're like interested and utilize everything that's out there. And there we get to the kind of discussion topic of FinLit. So why isn't everybody doing this? Well, of course, it requires two things. It requires time and knowledge. Like moving all of this, it's a lot of work. Like if you want to keep zero cash on your account and be fully invested, you basically have to do daily transfers. It's like horrible, of course. Knowledge, all the normal usual suspects, compound interest rates, why is it worthwhile investing? Different asset classes like Bitcoin versus stocks versus a safe fund, risk diversification, like Per was insinuating, counterparty risk, where can you actually take big losses because the company just disappears? And then the concept of optimizing your personal cash flows, which sounds super boring, but it's relevant. Then you look at the market, like I'm sure there was some news to most people in here and we're the interested ones. So there are so many services. Just understanding the advantages, disadvantages, and cost structures is quite a big job. And then there's a lot of behavioral psychology where you may be tempted to do things which aren't right for you. And you need to, as a consumer, understand this and what's good for you and what's not. I took this, it's a small picture of like Swedish fintechs. Not all of these are relevant for retail, but on the other hand, there's a lot of international ones that are relevant. So short picture I want to paint here is that there's a great opportunity for consumers to like make money, manage their money better, but the knowledge requirements and number of alternatives is like really overwhelming. So what's happening in the future then? Is this going to continue? Yes. We see definitely lower fees and faster transactions. And I like to think of it like we're going towards zero friction investing, like an asset cloud. You have all these things, cash, crypto, stocks, funds, and you can just move between them with one click instantly and no cost. That's kind of where this is heading. So it's, if you want cash, keep cash, but otherwise you might as well just push it around to other parts. We will continue to see more fintechs, but eventually there will be consolidation. Like you don't need that many providers as I had on the previous picture. For a while, things will be overwhelming, and then the kind of good choices will crystallize. This will, of course, mean there's going to be a focus on optimization and meta services. Just like the travel industry, there's a lot of sites to find the best flight instead of going to all the airlines. You're going to see the same thing here. So this whole push of like collect all your loans and lower the costs and move them, that's just the beginning. You're going to see that all over. So platforms are going to be more important. And this is going to be driven by growth of APIs and data access. We already saw regulation where PSD2 opened up your account data, having like a huge impact. Now there's a move to opening up investment data. And then if you imagine APIs where you could actually just move the money, so you could have a service that moves your cash around based on where it's optimal, that would be a game changer. So you can see this case being real in a couple of years, that I go into shop, I want to buy a cup of coffee, I swipe my phone, but then what happens is behind the scenes, I sell a small fraction of my stock holdings, the money is instantly transferred via Swish or something, and I pay for the coffee. So I basically had zero cash, and I do like instant selling of investments to just buy a coffee. But that's not unrealistic in a couple of years. So closing thoughts. This is a lot. Like what we're saying is there's opportunities, it's complex, it's messy. So what I would like, and I think most people would like, is just the button in your app, optimize my finances. Like just take care of this stuff. Have an AI, we'll keep you invested above 100%. We'll place you in a good mix of stocks, funds, and crypto that's suitable to your preferences and your life situation. Whenever you make an online purchase, we'll pick the best method that maximizes your cashbacks or deferrals of payments, etc., to just run this. Of course, this is not fully possible today, but if you think about what you really want to solve this, it's a lot of automation. Why should people spend like half an hour a day managing their cash or just ignoring it and then taking a suboptimal result? So my takeaways of this, like the trends, it's definitely like investments are getting more cash-like, and it's getting easier to move cash back and forth between investing. Costs and minimum sizes are really shrinking. So anybody can invest, everybody should be investing, especially if you're younger. Having a no cash lifestyle, and I really mean not just physical cash, but like no cash at all, is a realistic goal where all your money is invested and growing for you, providing you can like take that risk level. There are a lot of new services, and these services offer real benefits to consumers. Like they're in the market now, everybody should be using them. It's actually a very good thing. But to realize these benefits, our consumers need first the knowledge that they exist and how they work. They also need guidance, and that's maybe a good thing for the panel discussion. There is a difference between knowledge and guidance. And I think automation is going to be key because some of this just requires a lot of daily work and it's simply boring. So it's a good case for APIs, data, automation, and solving people's problems automatically. And I'd like to stop there. This is a lot of material. So I'll leave it over to the panel to discuss. And each of these trends is a topic in itself. So if anybody's interested, hit me up on LinkedIn or email, etc., to discuss further. It's all good fun. I'll hand back to Sofie there. Thank you.
Thank you so much, Daniel. A really interesting insights that I really think that we can dig much deeper into. And with that said, I would like to hand over to Philine and the first panel discussion. But before that, I just want to remind you about the chat. I can see that people are writing there at the moment, but don't forget it. And as you who has been speakers, please answer it. But with that said, over to you, Philine.
Thank you, Sofie. So lots of food for thought from our two first speaker sessions, and I'm looking forward to diving deeper into those topics now with our panelists. So the first person I would like to hear from is Alexia, the founder of Your Juno. So Daniel illustrated how cash is starting to move closer to digital assets like stocks and cryptocurrencies, and these are actually becoming more accessible to everyone. However, like he said, with that, it's also a lot of complexity that is added, and knowledge is needed to leverage those trends. And like Roboadvisors, for example, like he mentioned, are one response to this new need for knowledge. So Alexia, what are your thoughts around how this newly needed knowledge is distributed, and what is needed, in your opinion, to successfully create financial inclusion? Over to you.
Thank you so much for the introduction, and thank you for inviting me as a panel on this discussion. I think looking at the current financial education space, what I'm really struggling with is to see that a lot of it has been created for SEO purposes and for as a stream of customer acquisition. And so when you're an individual and you're trying to get informed and get educated around the different means of investing or crypto that exist, oftentimes you're not necessarily going to find unbiased education. And what I find fascinating is that the fintech industry is absolutely booming and access to all of these opportunities is being wildly democratized, but we're really missing the first step, which is spreading education on how to use the existing tools. It's one of the most incentivized industries. And I think if you compared it to the medical industry, we would immediately see all the red flags. If you went to see your doctor because he has a business that produces certain pills, and he was just using basically the consultation with you as a means to sell you his own pills, that would be seen as very misaligned incentive-wise. And that's what we're seeing currently in the financial industry, is that a lot of the education, a lot of the consultations are actually held by people that are then trying to give you a sales pitch and then trying to get you to use their products or services. And having access to unbiased financial education is incredibly expensive, because that would mean that you have to go to see a financial advisor. So we need more companies to come in and really provide unbiased financial education. And I'm not quite sure what the landscape in Sweden looks like, but I know that in the UK, there's a couple of these websites that already exist, where the way that they provide the knowledge is by completely separating the editorial from the commercial team. And so in the editorial side of things, you will have access to purely unbiased financial education and knowledge without trying to give you access to any products. And then the commercial team will give you the sort of commission and kickback of getting you onto another website, but they're kept completely separate. And I think we need to see a lot more of this. Then I would say, as a second point, in terms of increasing financial inclusion, we need to make sure that the products that are being created at the moment are also reflective of the general population and of all the different lived experiences that subgroups have. If we look currently at fintechs, most of them are created by white men, which is not necessarily a problem, but it'd be good if we could see more women, more people of color, people that are targeting elderly people, for example, creating solutions that really suit their needs, because otherwise we end up with products that are created by same minds and that have the same problems at heart, but that don't necessarily target everyone and that don't necessarily solve everyone's problems.
Yeah, thank you so much for all of that insight, Alexia. The next question, I'm going to go to you, Mathias. As Per said, the finance sector used to be dominated almost entirely by banks. And as we heard and all know by now, this has changed and fintech companies are now entering the field fast and aggressively. So Mathias, my question to you, how do these new trends have and are creating an empty space and needs for solutions that go beyond what banks can offer?
So I think that is an interesting question in two ways. I think the experience so at Juni, we are our customers consist of digital companies more or less entirely. So our operation, our neobank operation, if you will, is entirely business to business, and we're catering to many of these heroes driving growth in the economy. And those are direct consumer companies, performance marketing companies, but what they all have in common is that they are using the digital rails or the digital real estate to reach their customers. And as such, they are pushing the forefront of both payments, but also how to do digital business. But it's important to appreciate, and coming back to Per's initial thoughts here from the Swedish Riksbank, the development for cash or for payments in our world has gone from, for these companies, they grew up in the last few years. So they have never been in an economy without digital. That's the first thing. But also, even if you look at their ancestors, if you will, the companies that preceded them, they don't really have a cash experience either, many of them. So many of them actually come from a situation where bank transfers were sort of the go-to experience. Where we do have a difference is obviously in retail, and the retail that is getting more and more digital. I think what is interesting here is when you start thinking about the symbol, the money as a symbol, and how that is going to change things. So for our customers, the traditional e-commerce merchant, the symbol of buying something, even in retail, is no longer symbolized by a coin or a bill. It is the primary virtual symbol that we're using is the card. So that is, and I also noticed that with the recent the Njorda presentation here, when representing payments, there was not a cash payment. Even when talking about cash, it was a symbol of a card. And I think that part of society is really, really interesting. And when we're losing our sort of connection to the symbol, I think it's interesting with the e-krona, of course, but I think when we're losing our connection to the symbolized value that cash is, then we also get a disconnect for what is money really. And I think it is upon the fintech industry, and I think Gimi has done brilliantly in their target audience with parents and children, obviously, to give this some real thoughts about what are the symbols that actually gives us the idea of value exchanging hands. And I think there's a long way to go. So I have a sort of an anthropological perspective on the world at large, and I think both rituals are important, but also symbols are important. And I think this is where we can actually do better. So at Juni, the card and the virtual card, and the fact that we're also, as a sort of byproduct, send out physical cards to people just to make them aware of being a customer. That is how we sort of reconnect with money and transfer money. But we have completely lost, we're so many generations away from cash per se. So we need to reinvent that from a design perspective, from a symbol perspective. And I think it is upon the fintech industry and the neobank to actually do that. And to be honest, I don't think we have done it well enough yet, because we need to understand that value is exchanging hands, and that needs to be symbolized.
Thank you so much. Can I go to Sebastian and ask you, what are your thoughts on this question?
Yeah, sure. Hope you can hear me still.
Yes, perfect.
So you mentioned that empty space and needs, and I, from the consumer perspective or business perspective, I think, that empty space and need in one way has always been there. It's just now that the tech world is enabled to enter the finance world, and if there are things to be refined and to make more efficient, problems to be solved, or ultimately value to be created, I think, for end consumers and businesses, it's just a matter of time before it's going to happen, from my perspective. And it's just I just see, like, the beginning of this. I had a hard time remembering, like, how it was 10 years ago. All these companies shown in the presentations, almost none existed. So it's just recently that the finance world has opened up to the tech world and kind of made it possible for tech to catch up and be able to create this value. So I think it's just super interesting times. We've just seen the beginning of this, and yeah, that's about my thoughts on that.
Thank you for those perspectives. Alexia already shared her thoughts around the role of knowledge distribution regarding the new trends. Paul, what are your thoughts on that question?
Yeah, well, I mean, first of all, there is an awful lot of change that's happened. If we look just at how finances have been managed, how money has been viewed by individuals, but also how society have looked after individuals. Areas such as pension management, having an understanding that the state will look after you as you get older, these forces are disappearing rapidly, and it becomes more and more important for individuals to look after their financial well-being and understand, therefore, what it means to look after their money. I think Daniel had some very good statements in his presentation, but the thing that actually got me at the end was very correctly what he said around knowledge and insights, and also around guidance. And I think this is where we are failing dramatically, and I don't think it's down to the banks or whatever else. There's still an area that needs to be worked out here. And that's the fact that we are being inundated with perceived knowledge when it comes to money management, investment, and it's proliferated and growing substantially, driven by, as has already been said, people who are trying to monetize on the back of inviting people into, in a way, falsify the understanding how to manage their money. So I think it really comes down to finding ways to drive correct knowledge, separated from for-profit organizations, which creates a dilemma for most fintechs and most organizations that are trying to reap benefit out of the back of individuals engaging onto their platforms and their apps. But more importantly, drive insights that will enable individuals that are getting the knowledge to know whether the knowledge they are receiving is valuable knowledge for them, truthful knowledge for them. Let's be honest, I mean, fake news is still fake news, but even more these days, fake insights into your money management, the world of money and financial literacy is even worse, right? It could and probably will have a systemic negative impact on our financial lives. So I think it's critical for us to take advantage of new technologies, allow both fintechs and banks, but also society to put together capabilities that will enable individuals to make well-educated decisions and selections in what at the end of the day is a fundamentally emotional subject around money. And more importantly, what we're talking about is uncertainty. None of us know what the future looks like. We know what money we've got, but we don't know what the impact is and the risks of the investments we are making. So we need to find ways to enable individuals to really get insight rather than just knowledge.
Thank you. Yeah, the next question is hitting up on that as well. For those of us that don't have their own financial advisors, like me, for example, the overload of information out there can be intimidating and overwhelming, and often it's really hard to access trustworthy information, as we stated. Alexia and Polina, Per explained Riksbank's role in ensuring that payments can be made securely and efficiently. What needs do you see to ensure that these technologies lead to actual democratization of finances and actually help us navigate in the constant flow of information? Polina, maybe you want to go first.
Yeah, thank you so much. Well, first of all, thank you guys for organizing this. It's super important, really. And I'm really glad that you invited me, as I think me and Alex are the youths here representing the youths as well. We have a network full of actually the Nordics' biggest network for youth that are interested in futuristic topics and technology and how the world is moving forward. So we asked our youths some questions in regards to this panel discussion, and it's interesting that around 80% of our youths actually thought that they had their money and knowledge about their money and private economy in control, but still around 70 to 80% were more interested in finding knowledge and guidance in regards to how to navigate, and they agreed that there is a lot of flow of information going on, and where this flow of information comes from, in their opinion, are from schools, first of all. And there it's both that people and youths feel that they are getting enough information and knowledge and guidance about how to use and navigate in the economy, but there's also a lot of youths not finding enough support And that's why I think it's super important that there are these different communities and networks that support the minorities of everybody. So we can really ensure that we're democratizing the knowledge and just the support of all these different fintechs and the apps and the different trends. For example, on TikTok, we have a lot of youths finding information and trends, and that's not always really trustworthy. But still, since it's easily accessible, a lot of youths feel that is a right information to use and navigate, and that's why it's super important again that the schools keep up. If the schools don't keep up, that the organizations and different communities involved to ensure the minorities are also up to date. And then my third point is, what I want to mention is the parents' role. That is super important, and if we can't reach directly to the youths, we can reach to the parents that later can discuss, and parents are a trust for a lot of youth. So that's why I think it's important to reach out to them as well. Yeah, and then social media, of course, it's super important. Again, there it's easy accessible information, and that's what youths feel are the easiest way to navigate. And I think that's why it's also important for bigger organizations to be up to date with that trends and reach out to youths there.
Thank you. Alexia, do you want to share?
Yes, absolutely. I think it's a really interesting one, the idea of financial education. And what you mentioned before with not having a financial advisor is basically the position that I went into when I started Juno. I've studied finance and I worked in finance, so I was quite financially educated, but I looked at my friends and I was thinking, they don't have financial advisors and they don't have the means to pay for a financial advisor. Where can they go to get financially educated? And the biggest friction points that came out is the fact that, like you mentioned, there is a massive overwhelm of financial education. And like Daniel pointed out, there's also an absolute overwhelm of financial companies providing services, and then no one really knows what they do or how to use them. And so we thought with Juno, we need to tackle the problem in a two-step process. The first of all is education and really teaching people what is a share, for example, like the absolute fundamentals of investing. And then as a second step, we need to match them with the right institutions that would suit their needs best. And I think when it comes to education, what we're really lacking at the moment is this idea of personalized financial education. A lot of the resources that exist out there are one size fits all. And if you compare it to a language learning process, for example, no one would think that learning German, for example, should be the same process for everyone. There's some people that are really well educated and some people that don't know anything at all, and they would go through a different learning process and learning journey. When it comes to finances, it's the exact same. Someone that has lots of debt should not be learning about investing, and someone who's got lots of savings might not need to know a lot about how credit card debt works because they might never take it out. And so what we've decided to do with Juno is really create an app that does personalized financial education in the same way that you would learn a language, where you first assess someone's financial situation and where they're at, and then from there you build a personalized learning path that takes you through exactly what you need to know at a given time. And I think that really removes this whole overwhelm that you might have when you first go on internet and you try and Google anything about finance, and there's so many resources out there that you don't even know where to start. And then I think once people are educated and they understand how certain topics work, you need to match them with the right solutions. And I think I would love to see more companies becoming sort of the bridges between certain groups and financial services. At Juno, we focus on women specifically. So we try and understand really what are the services that exist out there that would best benefit women in certain situations and bridge that gap. But I think what we need to see more of is people that understand the landscape that Daniel pointed out, for example, in Sweden, with all those companies that know what they are and that are able to connect the dots between your average person that doesn't know finance and what they might need most in that big circle that he showed. So yeah, I think it's a
I'm so sorry. I think I don't want to cut you off, but I think we need to move on because we still have it's really interesting. I feel like we could talk about this forever. We have a few more questions. I ask you if possible, just keep these ones a bit shorter because of time concerns. But we can read and hear a lot, and we heard a lot about new fintech solutions that work B2C, and we've talked about how they help customers. Now we're kind of diving into what happens when new fintech solutions also go B2B, and what do companies need for a smooth transformation to utilize these new solutions. Sebastian, would you share your thoughts on this one?
Yes, sure. So I think so there was basically two questions in that. What I heard, what happens when fintech solutions go B2B is that you know, at least from what I see, there's two things going on, and you know, B2B trailing a little bit behind B2C. So B2C is a little bit ahead. B2B, that's usually the case in many sectors. But what is happening in the B2B space is that the infrastructure is kind of building, and then suddenly new solutions come out to the public or to the end consumers, that is businesses. At least leveraging, you know, more efficient solutions for themselves, be able to move swiftly, keeping up to competition, etc. And what they need, what I say, we talk to a lot of businesses every day, hundreds basically. I think it needs a bit of a, you know, shift in mindset and be able to be bold and dare and you know, decentralize decision making onto other parts of the organization that can make decisions to maybe try new things out. And of course, not everything's going to work out, but at least I think, you know, you have to be agile in your way of transforming and adapting new technology information as a company, no matter what sector. And lastly, I would just want to mention what we also see is that a lot of fintechs is using a lot of fintechs to build their fintech product. And solutions lie beyond, you know, when you come up with, you know, the first iteration of your solution product. Suddenly you open up for more possibilities, opportunities within the fintech. So what I see everything, you know, around the B2B segments, at least is that it's just growing exponentially fast. The more innovation, you know, nurtures more innovation in this space. So as I said before, like it is just the beginning. Everything is moving faster by the day.
Thank you. So Daniel also shared how buy now, pay later holds the possibility to leverage cash to optimize an individual's economy. But this once again requires knowledge distribution. So Christopher, what do you see as the downsides to trends like BNPL if knowledge is not a given? And what do we need to ensure to protect the next generation from those risks?
Well, the clear downside by buy now, pay later is that you create a learned pattern in many times young individuals that it's okay to spend more money than you actually have. And you're really motivating people to make bad financial decisions, which can have devastating consequences on their economy. So on one hand, adults should be able to make a decision themselves if they want to take on credit. But on the other hand, this is becoming a quite big societal problem, and people are getting in debt and ending up with debt at Kronofogden and so on. So I'm a bit torn. I think the steps which has been taking, like the law in 2020 that said you can't offer buy now, pay later as a primary alternative when checking out in an online store, as an example, that could be a solution. But I think the problem is more complicated than that, because you see, this is really a pattern in our society, and it's ingrained in the modern monetary system. So even countries operate this way. They spend more money than they have, and then they borrow money from the central bank to cover that debt. So we really need to start educating people, and especially young people, about the risks associated with it. And good ways to do that is using platforms that are offering credit, like Klarna example. They have a huge platform with a lot of people using their app, their services, and there they can really utilize the technology and also the trend that is right now, that more people are wanting to get smarter with money and using apps and tools to get smarter with money. But the most important thing and the most valuable thing, I think, is to educate in school. I think there should be a class in school that handles, goes over what money is, what taxes is, how you take a loan, should you take a loan, what happens if you cannot repay a loan. All those things you should learn from an early age, because that's something you're gonna have to make a decision over when you get older. And the current education system isn't really teaching that right now. So improving financial literacy is definitely a way forward.
Yeah, thank you. That's interesting perspectives. Paulina, you probably have a little bit of a different perspective. What are your thoughts on the same question?
Yeah, thank you. Well, I agree a lot with Christopher, what he said, and absolutely knowledge is super important to educate about the risks. And yeah, that is the biggest risk, that the youth, they end up with debt when it's easy to pay later and take credit for consummation. But well, my perspective in this is the social view as well. And that is that there's a lot of trends, again, about how many people earn a lot of money, how they're investing, and how they're having a very positive relationship to money. But there's not enough information and just people talking about the negative sides from a social perspective. So individuals that have actually debt, for example, or Kronofogden, that there's a lot of youths increasing in debt. That information, I don't think it's quite accessible for the youths to know about, that they are not alone in these problems. And I think that is important to write to raise that question and talk about it on a social perspective. And that, I mean, in social medias, with people that are role models, as well as in school, like talk about it, like have you like share within the class, like if somebody has experienced that kind of negative relationship towards money. So normalize to talk about the negative sides and the risks of using these technologies as well. That is my answer.
Thank you. I already asked Sebastian on his views on the effects on B2b solutions. We want to dive into that again. Mathias, what do you think about this?
So I forgot to unmute myself there for a moment, but I'm back now. I think there are so many perspectives on this that are interesting, and I come back to the cash as symbol thinking here as well. But I actually wanted to allude to something Sebastian was saying as well on the question of what happens in B2B. I think it was actually interesting is what happens to the parents or the people working in B2B when we have the fintech revolution breaking through our business life as well. I think what we see happening right now is that you have a distribution of let's call it financial power or payment power or admin power, perhaps even across the board. And I'm sure you, Sebastian, see a lot of this as well in your customers, that actually the financial questions is not generally a question only for the people inside the organization that are tasked with finance necessarily. And what you'll find, so I just wanted to mention that because I think that is an interesting pivot back to what happens with the buy now, pay later, and that credit discussion. Now, we are not a consumer company. We do not offer buy now, pay later for obvious reasons. A lot of our customers do, of course. But what I think is interesting with rethinking credit as well with fintech as a vehicle for it is that we can break things down a bit. So buy now, pay later is one example, but when that moves into the business to business context, we can actually see that short-term credits are very, very interesting. And we're launching a short-term credit product right now that makes a huge difference for our customers, that has a lot of capital bound up in inventory or with payment gateways or similar things. So I think what happens at large when we actually have some creativity around payments and credits, and when that hits business life and business to business life, are two things. A lot of people just working at a company are suddenly tasked with finance or find themselves working in finance, even though they were just recently in marketing. And B, I think we also see a lot of creative solutions that are actually making less harm than what you may see in the buy now, pay later situation with consumers or young people being affected. I think actually the creativity on fintech will do a lot more good in business life than so the downsides for that we've seen in consumer life with the same services. So I think that is exciting. So both democratization of finance or being tasked with finance, and also being handed power and new tools that will help your business. So I think I'm quite excited, to be honest.
Thank you. One last question. This one, unfortunately, has to be a bit quick. The finance sector used to be dominated almost entirely by banks, as Per explained, and we mentioned earlier. Paul and Christopher, what are you thinking about how fintech companies and banks are actually working together in regard to these new technologies? And what are the challenges and opportunities in that aspect? Paul, maybe you want to go first.
Yeah, so I think that if you look at the way that the fintechs aren't actually that new, right? Financial technology, PayPal is a fintech. They've been around for quite some time. But what we've seen is a disruptive innovation trend that's happening, which generally tends to be a good thing in any industry. The only difference is that the banking industry, the financial industry, is heavily regulated. And there is a symbiosis that's being built between fintechs that are driving innovation from a technology perspective and traditional banking organizations that understand how to operate inside of a heavily regulated industry. And those two coming together is what's giving us some fantastically interesting transitions and new innovative solutions going forwards. I also think that if you look at the most sort of grouping of fintechs today, they are attacking what we traditionally have seen as low-hanging fruits or very simple banking processes, payments, account aggregation, etc. Whereas for most banks, most of their revenue is still sitting in complex products, things like insurance, investment, etc. And so we'll continue, I think, to see a separation where fintechs will focus currently on the more simple products, and the banks will continue working on the complex products. But we will see this collaboration continuing to go forwards.
Thank you. Christopher, do you want to go as well?
Yeah, well, first of all, I think banks have a huge responsibility in regards of innovation and financial inclusion, because they are the gatekeepers of the current financial system, and they get to decide who can participate and what financial services will be available. And clearly, there has been an unsatisfied demand there from the customer side. And that's why we're seeing a completely new financial system being built by the fintech community and the crypto community. And there you have both very simple financial products and very complicated products, as you can see in like DeFi and smart contracts. So lately, we've seen the customers and the end user moving their money like never before into this space. And yeah, you might ask yourself why they're doing it. Well, it's just better. For instance, if I'm, for an example, if I'm sending money to a friend in the United States, why would I use the old banking system? It takes a couple of days, it's expensive, it's complicated. I can use a Bitcoin Lightning Network, which is instant, it's virtually free, and it's verifiable on a public blockchain. So the banks are lagging behind a little bit on innovation. but they have this nice infrastructure that millions of people depend on and are part of. So the banks need to integrate and open up their systems for their customers to use this new financial system. And if they did that, it would be huge opportunities with collaboration, and that would benefit the end customer in the end. And we definitely see this happening, more banks taking on fintech companies and crypto also, but not so much in Sweden. Most of the banks here are strongly anti-crypto. They make it very difficult to fintech companies to integrate their systems. But with legislation like PSD2, we've seen them being forced to open up their APIs. And out of that, we've seen services like Revolut and Trustly really making banking better and more available for everyone. So from my experience, fintech companies would love to work closer with the banks, but the banks just need to open up a little bit more, because that's going to benefit everyone in the end, and definitely the end customer.
Thank you all. Now we've been here for around an hour and had a great panel discussion. And that actually means that we are jumping into our next session with a more international perspective. As we heard, in the Nordics and in the Baltics, we are far ahead when it comes to technology and financial tools. But it doesn't look like that in every country. So I would like to hear more about that from you, Andrea. The scene is yours. Welcome.
Yes. All right. Just 1 second. Yeah, can you hear me?
Yes.
All right, great. So, and you can see my slides. Well, there are not so many to begin with. All right, great. So thank you very much for inviting me to speak at this event. It's really wonderful. And I'm an academic and especially a precarious early career researcher. So yeah, it's really great that you invited me. And I've already learned a lot today, especially about how cashlessness discourses have developed over the last years in Sweden, which is a country where I lived and worked between 2017 and 2019. But for today's discussion, I will take you to a world really very far away from Sweden in terms of its cashless ecosystems. And my speech will not be as optimistic about technology. Sociologists like myself, we love to complicate things. And from our research, what came up is how something which is fundamentally created to connect is equally capable of excluding. So my contribution stems from the work that I carried out with a dear friend, who is also a dear colleague. Her name is Gillette Sam, and she works in India as a young professor of sociology at the Indian Institute of Technology in Kanpur. And initially, so around 2017, basically, we were both interested in exploring the political discourses and social consequences of cashlessness in India. And what especially piqued our interest was the demonetization of 2 high-value Indian currency notes, which declared these notes valueless overnight on 8th of November 2016. So the Prime Minister of India, Narendra Modi, who is still the Prime Minister now, in a national televised address explained that to break the grip of corruption and black money, the Indian government had decided that the 500 rupee and 1000 rupee currency notes, and these formed about 85% of all the cash in circulation in the economy, would no longer be legal tender from midnight of 8 November 2016. How do I move to the next one? Yeah, okay. So the Prime Minister's speech echoed economic and policy level discourses which attribute cash to underground economy. As you know, Harvard economist Kenneth Rogoff noted cash as a curse which ails the world today. And he argued that cash is used for tax evasion, corruption, financing terrorism, the drug trade, and human trafficking. And many of these concerns were also reflected in the Prime Minister's speech on 7th November. Shaped by a burgeoning anti-cash agenda at the international level, the idea of cashlessness gained prominence in Indian policy and governance circles, with a shift towards becoming what they call faceless, paperless, cashless. That was identified as a key role of Digital India, which was the government of India's flagship program launched in 2015, just before a year before the demonetization policy. And the Indian demonetization experiment, the largest of its kind in a democratic country, too gathered a considerable global attention as a push or even a jolt towards cashlessness and a digital economy. And I think I can already see a major difference with the Swedish experience, because of course in Sweden the change was a lot more gradual and the infrastructures were already in place. So over the last years, experts, analysts, and activists' opinions have been divided on how effective this particular policy move was. Several of the critics of this policy, including top economists, which include the ex-Indian Prime Minister Manmohan Singh and the ex-governor of the Central Reserve Bank of India and the ex-chief economist of the IMF, Raghuram Rajan, they have criticized this policy. Some of them have pointed out how limited access to digital infrastructure could negatively affect small and medium-sized enterprises, as well as other sections of India's heavily cash-based economy. Many have questioned, backed by sound banking and financial data, how effective a move of this disruptive nature was in actually curbing corruption, because almost 98% of the cash money was deposited back into the banks. While fighting corruption was used as one of the most vocal reasons to move towards cashlessness, we of course see another very strong motivation for this move. And that of course brings us to the very obvious discussion that we have been having, which is financial inclusion. And that echoes, of course, global developmental agenda from international organizations. So financial inclusion, as you know very well, is closely tied with the realization of multiple SDGs 2030. And these conversations emphasize the inclusion, of course, of digital technologies, especially mobile money, and a move away from cash. Of course, the Kenyan e-Pesa example is very well known. In a 2014 report, the McKinsey Global Institute identified digital payments as one of 12 empowering and disruptive technologies that could improve the standard of living for Indians across the board. In fact, following the policy trajectory of the Government of India on financial inclusion, we see that the first step towards enabling digital payments and cashlessness ecosystems was the creation of bank accounts for the unbanked. The Bill and Melinda Gates Foundation notes that between 2014 and 2017, the percentage of Indian population with bank accounts had risen from 54 to 78%. The following year, the government, as I said, 2015, they launched the Digital India Initiative, which focused on developing digital infrastructure with the aim of rapid transformation affecting many sectors of the society. And this policy also led to the introduction of apps and digital payment interfaces developed by government ministries, in our case, to facilitate online payments through internet banking, credit, and debit cards. However, of course, and this is where the sociologist kicks in, as I said, the government focus on enhancing digital payment services must also be seen and read and considered in the light of user facts from India, as the critical infrastructural requirements and basic know-how of technology, even at times, are unavailable to many sections of the society for a variety of socio-economic and cultural reasons. And as we noticed through our research in the Indian scenario, policy and technology design often do not take into account the considerations and constraints of end users. They tend to be top-down and agnostic. For instance, if we consider access to money through the lens of gender, which was an obvious choice for us while doing the research, we encountered some striking paradoxes between envisioned and actual outcomes of financial inclusion efforts. So media outlets have reported that the gender gap in opening accounts in India has been reduced. Findex, as you know, the World Bank Index for Financial Inclusion, estimated that in 2017, 77% of Indian women owned a bank account against, wait for it, 43% in 2014 and only 26% in 2011. If this basic measure of financial inclusion is taken into consideration, yes, we could say women are more financially included than before, but however, and this is very important, many of these accounts lay dormant. And in a more focused micro-level study, sociological study that we did on with informal and semi-formal women workers in a northern Indian state, we saw that women's use of their own bank accounts declined when debit cards were issued to them. And these tended to be controlled by their male relatives. Of course, in their world, mobile payments, etc., did not exist at all. And we are not even still talking about the poorest women of India. We're talking about a median. So thus, while government reports suggest the volume of digital payments has increased since 2016, the above research, that is our research, suggests that this does not always translate to the desired diversification of the user base, and which is of course crucial when we are talking about financial inclusion. It cannot just be numbers, it has to also happen horizontally. So then what I want to conclude with basically is that even if there is the noble intent, as it were, of going cashless and embracing digital payments, it is important and extremely important for that matter to unpack the legal, economic, social, and technological concerns which impact the design and the experience of cashlessness, as we see, of course, in the Indian context. And of course, for future research, because as we know, most of this literature academically is still coming from the global north, and also the recommendations, the institutions which recommend, they are also again from mostly the global north. So for future research, comparative studies cutting across national and regional boundaries could pave the way for a more human-centered approach to designing cashlessness, and taking into account social, cultural, and of course, educational variables too. And with that, I stop.
Many thanks, Anisha. And with that, we go directly from one impressive researcher to another impressive person who creating tangible solutions to address the financial literacy challenges into countries like Tanzania and Colombia. The stage is yours, Maria. Welcome. I guess you might be muted, so please take it again.
Hi, can you hear me?
Perfect, thank you.
Yes, so welcome everybody. I am Maria Andrea Prieto from Colombia. I did a Master in International Development and I have been working in Fundación Capital. So just one step before, like in what is happening in Sweden, I want to come back to the developing countries because we have huge challenges in terms of the first step, that is having financial education. So I have been working in Fundación Capital. It's a nonprofit social enterprise that has been working for more than 11 years to promote economic citizenship. And in this, we implement a human-centered design approach and a data science approach to improve the financial lives of people living in vulnerability around the world. As you may know, like we are working and focused like in terms of the around poverty, and we have other challenges that we need to tackle in order to create financial inclusion. So we have been working and reaching with different organizations. We have like 6 international awards, and we have been working across like Latin America, Africa, and Asia. So just to give you like an overview, we have reached around 7 million people around the world. And also, just to put you like in terms of the context, we work with the poverty and extreme poverty of the population. We have developed like different like applications, but today I am going to talk about Lista, that is focused in financial education. So like the main problem that we want to reach, as you may know, we tackle with financial exclusion. So around 1.7 billion of people are unbanked. And moreover, we have the huge challenge that 40% of households have like low educational attainment. So this is like a really big challenge, because it's like they don't have access to technology, that they are excluded from digital economy, but they can read or write. So if they can't read or write, we have more challenges to go and use the technology. And in terms of our context, because of the geography, the ICT infrastructure is challenging to have like access to the economic world. And this, like as you were mentioning before, like we have huge challenges in terms of gender inequality. And this, in the context matters. If I can give you an example, the situation in Colombia, probably in terms of the context, is different to Mozambique, the way that the communities relate and understand the access to money and to financial education. So that's why we develop an application that works offline, and we can rotate this application to communities. It's like for low literacy, where we can have like relevant data from the communities to teach them how to save. And you were sharing here the importance of the goals, reaching goals. So we teach them how to reach like short, long, and long-term goals. So to give you an example, in our context, many people, they don't have any access, or they don't have like any relation with a cash machine or like mobile applications. So we developed these like for low literacy people, and we have like audios in the applications. We have like stories that could engage and motivate the people to understand the importance of using money. So the idea is to create and increase the choices in people, because in the context that we work, there is a huge amount of informal economy. So the first step is to change this informal economy to a formal economy. And then this application, what we really want to do is to increase and improve the capabilities and the abilities from the people, so they can access and to the formal economy. And also we were like having like the digital literacy. From now on, we have been reaching over 500,000 across users across 12 countries, and we really want to increase the financial health and reduce the inequalities. And we are working to reach the Sustainable Development Goal number 10, that is reduce inequalities. And first, in order to create like access or like the use of financial services, we need to improve the knowledge, the attitudes, and the skills from the people. And just to give an illustration, this is an example in Mozambique. So it's not only the product, like the application, but it's the way that we implement the app. So we use, because in many contexts, they don't have access to a mobile phone or to tablets. So we rotate the tablets in the communities with community leaders, so they can share the application in their communities. So here is an example of the illustrations that we use to engage the community, so they can feel and yes, feel represented in these images. And the purpose is to understand the context and to change the mindset that they have around money, and so how they can help them to reach and be in a financial included world. But the first step is to reach and, yes, like share financial tools and the educational tools in order to make decision. And the next step is from these communities is to connect them with financial services, because one thing is the access and other thing is the use. And it's not only accessing, but also using. Just this is an example of the implementation that we do to deliver this digital solution in rural communities. That's from my side, and let me know if you have questions or if you want to know more. You can search more about Fundación Capital, and I am also in LinkedIn. My name is Andrea Prieto. Thank you very much for the invitation.
Thank you so much, Maria, for those insights. And I will remind you all about the chat for now. But now I will say welcome back to you, Philine.
Thank you, Sofie. It feels great to be back for our second panel discussion. This time, the first person I want to ask a question to is Lana. So social structures were pointed out both by Maria and Andrea in regard to the digitization of money, as they influence the way tools are used and distributed. In those contexts, that influence is rather visible. For example, as Maria just said, with men and community leaders being the ones in charge of iPads. And when looking at Europe, we also have those social structures, obviously, that have influences, but are harder to pinpoint and grasp. So Lana, how do you see those structures might still be influencing how tools are distributed here in Europe, for example, regarding gender?
Hi everyone, and thanks for that question. It was really interesting panel discussions so far, so I've learned so much. But to get to your answer, I think here in Europe, what we can see the segregation is I think it goes beyond gender. We can see within different age groups, it's harder for people to at the later age to access various services, financial services. And we can also see some segregation happening when it comes to immigration and immigrants. If you are new to Sweden and, for example, come here, it takes time to get a bank account, which then restricts your access to bank ID, and you are excluded from the society until you can be, sorted with those practical things. And if we think about the gender structures, we all know that majority of wealth is still held by men, and from that perspective, there are financial tools that are available to those who have more capital that are maybe less available for the ones who do not have that type of capital. And in terms of gender, that makes women at a disadvantage. So that would be some of the examples that we have here in Europe.
Thank you, Lana. So the next question goes to Elin. In the Nordics, as we heard from Daniel as well, we're very far ahead with the tech trends, especially compared to the rest of the world. Our technology here are evolving at an extremely rapid pace. So Elin, what challenges do you see that we might be facing due to this fast pace regarding financial literacy? And what do fintech companies, banks, and other players have to do to kind of catch up with these developments?
Yes, hello. Can you hear me?
Yes.
Oh, good. Yes, so basically these like emerging technologies are making financial products and services more widely accessible, but also more complex for the regular consumer to handle. Young people entering adulthood today are facing much more challenging financial decisions than previous generations. This goes back a bit to what Daniel was talking about previously, but like young people of today have, for instance, cryptocurrencies, buy now, pay later payment methods, virtual economies, and microtransactions at their fingertips. And adding to that, at the same time, this generation is more likely to have to deal with challenges such as longevity automated labor markets, and increased individual financial responsibilities, according to the OECD. So this might not be like a 100% accurate metaphor, but it's kind of like we are giving children a very advanced Lego building set without the instructions on how to properly like put the pieces together. But if done right, this like could turn out to be like a magnificent construction. So I believe that like these emerging technologies have a great potential to improve the everyday lives of people, but we need to take responsibility to ensure that children actually do have the skills and knowledge that they need to navigate this new financial landscape when growing up. And like, of course, they should learn this in school, but we also need to team up and create products to simplify the teaching processes also for parents, because financial socialization is like proven to be one of the strongest mediators of financial literacy in children, kind of.
Thank you. With that, I will give it to you, Lana, to what do you say about that same question?
Very good perspective. The only thing that I would add there is that there's an overflow and it's readily available information that is very hard to digest, and that's about financial services. That's about any area that you can think of. There's information overload, and for most people it is hard to grasp that. So to Elin's point, we need to make it simple and need to make it accessible, and of course there's also a governmental role that must be played. Most of the time it's reactive, as we can see with the buy now pay later, those type of, you know, the SMS loans and the type of services that often can be seen as sharky towards the consumer. So government has to play a role as well to protect the consumer, and they are, but sometimes it's happens relatively slow, especially with the speed that things are evolving and now they're accessible. And to be fair, there's some things like what we talked about, cryptocurrencies, like there's only that much what government can do in regulating them. Yeah, helping to digest information and at the point of purchase or at the point of usage of the service, informing the user of the consequences and really making sure that they understand.
Thank you, Lana. Before that, you also already shared your view around the influence of social structures. So I want to come back to that and ask Alexandra, what are your thoughts on that question?
Thank you. And thank you all. You're so great. I love listening to you. I think like I come from a youth perspective, and I think two vital factors is like we still have stereotypes in like who can be financially literate, who is in the like tech industry. And for example, I'm a mentor in like a suburban school, and I'm a lawyer. And they told me like even being a lawyer is so far-fetched for them, they don't even like want to go to law school. And of course, these also affects like stereotypes for in the tech industry. And the problem is that if we don't even have that youths that are women or youths or people of color that goes into these industries, it happens like Alexia said, that the apps are not formed for these kinds of groups. They're still formed for the people that use them and that creates them. And we can even see like in low-income families that are often represented by people of color, that they even get disproportionately affected by school. And school is like heavily, like people said, like school will be easier now with the internet, but it's still not, because we don't even know what kind of information we need. And for example, with finance, people have like hard time understanding why it's so valuable. But I do believe in a shift, because we do have the opportunity to make this much more rapid thanks to technology. But it has to come like in a very personal level, I believe, in order to build trust with these communities.
Thank you for that perspective. Anvesha also touched upon the role of policies that form how a society transforms towards a cashless society. Magdalena, how do you see the role of policies in this transformation, and what may people need from the public sector to be equipped for the fast pace of technology in the financial industry, in your opinion? Magdalena, I think you might be muted.
You're absolutely right. It's not often that I'm mute. I will try and deliver a substantial rant to make up for that moment of silence. So just to contextualize my point of view is I'm hosting a very, very long running show in Sweden called Lyxfällan, freely translated into the luxury trap. Luxury because we are dealing with first world problems, very different from the previous speeches. From the rest of Europe. So we meet on a weekly basis people who have, for various reasons, found themselves in financial predicaments, mostly these days from overspending. Also, something that I've noted is that our applicants are increasingly younger and younger, and we just try and help them both short term by negotiating with their very, very bad credits, and also by educating them in fundamentals about only spending money that you don't have. And believe it or not, the most successful pedagogical element of this whole show is us using a old school blackboard like that our teachers would use in the 70s, displaying using cash. This is how the individual spends their money, and visualizing the overspending. And every week I get the feedback that, oh my God, I had no idea that I was using this much money. So this is a very, very concrete consequence of not using cash, not seeing how much is being spent. Now, let me use the reference of widely used consumer goods such as cigarettes or alcohol. In Sweden, these products contain a warning text and sometimes even very, very graphic images of the dangers with overconsumption of cigarettes or alcohol or snus, whatnot. My question is, how come consumer credits are like, why are they not marked with proper information such as the compound interest or the actual complete cost of credit? The truth is, from my perspective, and I've seen it for some years now, the average citizen does not grasp what does interest rate mean, how much money it actually will end up being. So this puts a big responsibility of the government, of legislators and policymakers, and of course schools. But as for policies, they need to put a lid on, or actually a roof on, how much can credit companies make of unknowing, clueless consumers who don't understand what they're actually signing up for. So this is actually me throwing an open glove to Finansinspektionen, who are, their job, their task from the government is consumer protection. My experience from what I see is that they are failing in this task. This needs to be addressed. And the current consumer protection law says that there's an upper limit of a 40% interest rate. Well, let me tell you that upper limit does not help a person who will be paying this loan, who has signed up for paying this loan over a period of 15 years. This will still end up to a, excuse my French, shitload of money that this person most likely will never have. So what people need from the public sector is to know that the whole financial sector is equally controlled and regulated, not just the bigger banks, but all credit institutes who are, for some reason, even though they're settled in Malta or Cyprus, everybody wants to come to Sweden. And even me, taping my 9th season of this show, I every week see new credit companies that I have not seen before. They are popping up like mushrooms in a forest. And also, I do know that the legislators are looking at, maybe upgrading consumer protection, blah, 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 blah. I have been browsing through these proposals and I am not impressed. I would like to see just some more forceful policies.
Thank you. I really like the metaphor with the cigarettes, very interesting. And actually, you also said the visualization and the board. That's very, very fitting to my next question. So Maria showed that there are, independent of the context, there are some things that are always kind of the same regarding financial literacy, like core elements, for example, using visualization to actually teach the value of money linked with then creating engagement. And so I want to ask Elin, what do you see as the unique challenges and opportunities for financial literacy that come with moving towards a cashless society in that aspect?
Okay, well, so from my perspective, one of the greatest challenges as I see it is that fewer children are even getting an allowance when society is transitioning away from cash. Grown-ups, i.e. their parents, are almost exclusively use digital services for their everyday finances, but there are few options available for managing their children's money. So instead of dashing to the ATM every Friday after work, parents tend to pay for what their children want whenever they want it. So we need to build financial services that better fit into the everyday lives of families, making money more accessible for children again. But this also ties back to with respect to the educational aspects that you were primarily asking about of cash versus digital money. That's actually where I see the greatest opportunities to learn today. So today's children are growing up in a digitized world where smart devices are a natural part of their everyday lives. And for them, digits on the screen may be more natural than coins in a piggy bank, at least at a certain age. And as surprising as that might sound for some of you listening in now, there's actually a new released research report indicating that already 8 to 9-year-olds have no more difficulties understanding digital money than cash. And with digital technologies, we also have the opportunity to amplify the symbolic value and add functionalities that help children actually make even more sense of their money. And in the long run, better prepared to face the financial challenges when entering adulthood that I talked about previously. So, for example, we can get children hooked on savings by visualizing the path to reaching a savings goal, or different amounts can instantaneously be translated into items of value for that child, and deeper insights can be built to visualize the spending statistics and behaviors, for instance. So if you utilize the changes that are happening today, I believe that we can create even better learning conditions for our next generation than we had so far with cash.
Thank you, Elin. I want to come back to something that Maria and Anvesha both pointed out, that in the context that they work in, the role of the community is essential. So in the UK, Maria said that she sees a lot of these community aspects fade. So exchange of cash in person is not really needed anymore because everything is possible remotely alone with your phone. So Magdalena, I want to ask you again, what do you think does a cashless society do to our communities, and how might this affect our next generation as well?
Well, let me tell you a story about when I was young, which was a while ago. I would get a few coins, when we had smaller values of money, I would bring them to the candy store, and even before actually grasping the value of every coin, I would point at a couple of pieces of candy and then ask the vendor lady, so how much have I spent? Oh, you got a krona left. Okay, in that case, I want blah, 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 blah. And then lo and behold, my pocket is empty. I get my bag of candy and I know that after spending, I have nothing left. So I chose to spend my money and voila, I have no more. Today's children get no chance of getting the correlation between choosing one thing and spending money and then having none left and having to abstain from other sorts of consumption. So that means that they grow up and they obviously have a harder time with realizing that even though I have no money in my wallet or in my bank account because it's digital, I cannot buy this cell phone or this piece of clothing or even this trip now. They never learned from the start. And, you know, this in combination with very aggressive credit companies who, you know, not will only send emails these days, they will actually even call you and say, you know what, treat yourself. Why don't you go, you know, spend whatever. What do you think this leads to? Currently, we have a higher pressure than ever in the Kronofogdemyndigheten, which is like the last outpost of before financial personal bankruptcy. Like freshly become 18-year-olds are already in debt over their heads and possibly never being able to pay back their debts from, and this is because for lack of knowledge. So they are applying to our show. They are filing for personal bankruptcy at a very, very young age. And the problem is with, in Sweden, we have this system of skuldsanering, meaning that if you cannot, over a foreseeable future, pay your debts, we will take the money from your salary. You will live on a absolute minimum over a period of 5 years, and then the rest of your debt will be lifted. However, at this young age of 18 or 20 or even 25, you know, you still have some good 40, 50 years of work ahead of you. So you will absolutely not be granted a personal bankruptcy. Instead, these kids will be, you know, living on a minimum and a shit quality of life for the rest of their lives because they didn't understand the correlation of using money, be it cash or be it digital, and overspending and what that, you know, will lead to.
Thank you. Alexandra, what are your thoughts on the same question?
I will talk from the perspective of youth. We actually asked our youth, and 70% are positive to this trend for the communities. And I actually agree, because if you look from the point of view of the communities, we depersonalize companies. And I think it's good because instead of getting a connection with a company, we can spend our time and energy with true communities, like our friends, our family, and this part instead of building connections with companies. Though I do believe there's a bad side of this, and that is depersonalization of the company also leads to disorientation, because we don't no longer know who to talk to if a problem occurs. Because beforehand we just go down to the store and we can talk to the local store owner oh, I need help, I don't understand what's happening. But now, for example, Facebook or Amazon, I don't know how to contact, and I don't really have trust in all these services because it feels like a robot is talking to me.
Thank you. Thanks. That was a nice different perspective on the same question. So I can say many thanks to the panel for both panel discussions, for interesting discussions and insights. I thought it was a great way to bring the speaker sessions into discussions and to life. Unfortunately, we only have 5 minutes left, so I believe we want to take the questions that you have been bringing up in the chat, and we will send them out later after this event, and I will hand it over to Sofie with that.
Yeah, and I can just say the same. I'm super thankful for today, and yeah, Philine, how to summarize a day like this.
Yeah, it's really hard to summarize all these amazing insights. I feel like there were so many perspectives. We kind of have to wait and melt it down a bit and summarize it for ourselves. But one thing I can say is that all of you who have been here today have done an amazing effort for our next generation. So thank you for that.
Yeah, and to say the least, I just need to say that this is actually a start of something big. This is a network, like including you who are in the audience right now. So take the opportunity to like catch each other after this event and create smart solutions and share insights and spread the knowledge that you heard from today.
Yeah, so Sofie, what happens now, you might wonder.
Yeah, for sure. So I will tell you that the whole event has been recorded, and I will publish it on YouTube, social media, and of course it's all for free to share. I will send it out to you when everything is done with the recording. And also we will send out the questions that we have today in the chat that didn't get any answers. Yeah, do you want to add something, Philine?
Maybe that we're already gathering ideas for our 4th edition of the FinLit Network. So I want you all to stay tuned, and we hope to see you again and have more discussions, deep dive even more into it. And I'm really excited for it already.
Yeah, and with those words, I would like to say thank you for participating in the 3rd edition of the FinLit Network.